It's time for Top That Trade. Joining us today, our two favorite players, Phil Flynn, a Fox Business Network contributor, and Alan Nuckman, a pro trader and the chief market strategist at BullseyeOption.com. Round number one, guys, rate reality. What do you think is next for the stock market as the Fed raises rates?
If you look at the futures markets, they're telling us that there could be a cut. Listen to me, a rate cut in December, because in 2024, rates fall back down to 3.5%. In 2025, back down to 3%. So a rate cut is usually very positive for the markets. The first 3 months after the last 6 times that's happened, we saw a 10% bounce. And then a year after that, we've seen an average 18% jump.
Well, if we get a rate cut in December, Alan Nuckman, I will give you credit because you're like the only man on the planet that would be predicting that. You know, in fact, if you look at the Fed fund futures,
that's what the markets say. That's what the markets
are really saying that right now. But we'll, regardless, it's a great bold call. And if you're right, I'm going to give you kudos. And I absolutely agree with you, though. Whether or not we're going to get a rate cut in December
doesn't matter.
Plateauing is definitely something that we're going to see. And whether we get it in December or early next year, the markets are definitely pricing that in. And the stock market always looks ahead. And one of the amazing, looking forward, exactly. And one of the things that we've mentioned on the show, both of us, is that, you know, in a rate hiking cycle, it isn't necessarily bad for individual stocks. And we're starting to see that in the earnings.
Round number two, CCOW. Floating dairy farms may be in the future. What live cattle commodity contracts look ready to stay afloat?
I think that's mean, putting cows out in the water that, you know, they could get seasick and stuff like that.
They'll be on pontoon boats. They're fine. They're not swimming. Cows can't swim, I don't think.
I don't know. It just doesn't seem right somehow. You know, and it doesn't seem right that cows are getting the blame for climate change. You know, leave the cows alone. They've been here before we were, right? They weren't domesticated back then. But regardless, you know, the bottom line here is that cows are going to be around for a long time. And there's a lot of technologies trying to lower the impact of carbon emissions from cows. And that's why I like the cattle market right now. I think the cattle market is going to be huge, despite the fact that many people in the world want us to eat things like bugs instead of meats. I think meats are going to be around for a long time, and I think the market has a nice setup right now.
Looking at April live cattle, it's been trading between 150 and 160 for almost a year. Not doing a whole lot, but we're up here near those highs. But in the bigger picture, it's bounced back from the 80 level back to this 160. So if we can get a full V recovery, which we've seen so far, that technically targets 240, which is another 50% above. So there are a lot of things that can really impact the cattle market. You know, if you can have some drought, if you have some grain spikes. So potentially there's a lot here on the upside for this live cattle. But Phil knows those commodities a lot better than I do. I just look at the charts and I like what I see.
Round number three, missed mark. Do you like Microsoft with its $16 billion in quarterly profit, or Goldman Sachs, which cleared $1 billion?
These are companies that are cash cows, sticking to cows. $1 billion pure profit from the quarter is better than most S&P companies do on the year. Now, Microsoft, it just prints money, and they got huge margins. It's only up 1% on the year, but the NASDAQ is up 10% on the year. So there's more upside there. But looking at Goldman Sachs has been between 300 and 400 now for the year. That targets a breakout to 500. XLF, the ETF that tracks the financials and the banking stocks, is up 5%. So I think Goldman Sachs is 20% off its highs. It's got more upside, and I think those boys will figure themselves out.
Yeah, it's kind of interesting. If you look at the charts, Microsoft looks weaker and Goldman looks a little bit better. So I think Alan's actually right. But, you know, if you had to choose one or the other, if you're going to be in there for the long haul, you'd have to go with Microsoft, because they're going to generate, you know, at least, 20 cents earning per share, or 20% earning per share over the next decade or so. So they're going to make a lot of money. But I don't think you can go wrong in either one. But it's kind of interesting to see Goldman falling on hard times, right? Goldman used to do no wrong, right? Goldman never does anything wrong. But it shows you that even Goldman Sachs can be human sometimes.
Hard times. Okay, I want to be in hard times. I want $1 billion for the quarter when I hit hard times. That's what I want.
That is so true. Here's your bonus round question for today. What famous basketball pro is not investing in pickleball, as far as we know? LeBron James, Magic Johnson, or Larry Bird?
I don't want to say anything disparaging about Larry Bird, but I think he's more focused on his corn crop in Indiana.
I'm going to say Magic, but I was going to say Larry Bird, but he beat me to it.
Bird is the word. The Chicken Man wins. Thank you both for playing. We will be right back.